Good morning, everyone. Welcome to our Friday morning trading room. Friday is our Rabbit Hole Friday session where we play around a little bit. We take a look at some indicators and whatnot. Just a quick overview here before we get into that. The last couple of days, we've had that big bear day on Wednesday. Look at Thursday. Just a perfect doji kind of day, even though there was a lot of activity going on there. And Friday already, including the overnight and the aftermarket, quite bullish. We're actually opening here with a bit of a downside gap. So it looks like the market recovering a little bit. All right, Rabbit Hole Friday. I thought what I would do today is I would continue with the DMI indicator, the ADX/DMI. I touched on this a little bit last week, but I got cut short because Rich Friesen finally showed up. Here on the, I always get confused which one I need here on NinjaTrader. I think this is the one. Yes, this is the one. You want the one that plots the ADX, the DI plus, and the DI minus. And what we'll do is we'll get rid of the Bollingers and we'll add that for now. And I think I will lower the threshold a little bit. Okay. So the ADX/DMI is actually the same indicator. It's a little bit funny looking and takes a little bit of getting used to, but it can be a very useful indicator for helping you judge which side of the market is stronger and which way the market is likely to go, and whether or not there's going to be a trend behind it. I know, almost sounds too good to be true, doesn't it? The ADX, which stands for Average Directional Index, is this broader line. Now, a lot of you will watch the ADX for indication of a trend. The logic behind it is that if the ADX is rising and or above your threshold line, now traditionally the threshold is at 25, I've reduced my threshold line to 20. When the ADX gets above that zone, then you can count on a little bit of trend developing. You can count on a little bit of follow through. One thing that is important about the ADX line is that it is non-directional. So you can have a trend going down and ADX will be going up. You can have a trend going up and ADX will be going up. So long as you have to remember it's a non-directional indicator. So long as it is rising, the trend is getting stronger. If it's falling, the trend is getting weaker. What a lot of people don't know about ADX, though, is how it is actually calculated. Well, the calculation is derived from these two squiggly lines here below, which are your DMI lines, which stands for Directional Moving Index. You have positive forces and negative forces. I'm not going to get into the math. You can look that up on the internet if you're a mathlete and so inclined. The positive forces are illustrated by this blue line. The negative forces are illustrated by the red line. You can see when the bearish trend is getting stronger, the red line is on top and the blue line is on bottom. When the bull trend is getting stronger, the blue line is on top and the red line is on the bottom. So just by focusing on whichever line is on the top, you will know who is dominant in the marketplace. Pretty simple, right? I touched on last week one of the great little strategies to use with your DMI/ADX, well, we'll just call it DMI, is when your lines cross, as they do right here, and then you get the pullback. You're very likely going to see a comparable pullback in your chart. That pullback, that cross and pullback usually offers a very good trading opportunity. And you can see, coincidentally, or maybe not, it also coincides with one of our high probability signals. So we have the cross, the pullback, and we actually have one of our high probability signals developing here on the Falcon. So when you see this cross and pullback, pay attention on your chart, because the next signal that develops is probably going to have some follow through to it. Now, sometimes, or ideally, what you want to see is you want to see the cross and pullback develop rather quickly. When you get a cross and pullback that's, a little bit extended, then sometimes you got to cast a little bit of suspicion on what's going on. But take, for instance, this one right here. So we have the cross, so now we're on the alert for a selling opportunity. We have the pullback, we have the signal, and the ADX is beginning to rise as well. Now you have to remember these indicators, they are lagging indicators, so it's actually basing its calculations on what occurred 14 bars ago. One thing about using the mean Renko bars, however, is that you tend to get better results than you would with a time-based chart. If we were looking at, say, a 5-minute chart, well, 14 bars back, that's an hour and 10 minutes ago. That's not necessarily going to have much influence in what's going on with prices right now. But with the mean Renko bars, 14 bars back, that's like a minute and a half ago. Big difference. So one thing you're going to find by using the mean Renko bars with some of these indicators is that they're going to be much more responsive. And there you go. You had a very nice move lower. Notice the whole time the ADX is rising. That tells you that the trend is building. So if you were in this trade and you're getting close to your profit objective and you see the ADX rising like that, you might think, maybe I'll try to stretch this one out a little bit. Let's see how far it can go. And you can see that you actually were able to pick up a couple of extra dollars before you start to encounter the first bounce. Let's take a look at another example here. So here's the cross, here's the pullback, here is the signal that is developing. Once again, the ADX is starting to rise a little bit. So that might make it more inviting to try to run a trade out a little. Okay, we're starting to, you can see we're starting to hook. These hooks, when your dominant line, the line which is on top, begins to hook, that's sometimes an indication that you want to become a little bit more aggressive with your stops. So with this hooking here, if my initial stops were a little bit further back, I would certainly think about cozying them up a little bit. If not at break even, then perhaps below that swing low right there. Well, there I would have got tagged at break even, and there's a little bit of a recovery. Note the ADX is starting to decline a little bit now, so that's suggesting that the trend is weakening, not that the trend has evaporated entirely, rather that it's just getting a little bit weaker. And here we go. You can see it's still positive. It's still above this 20 line, the ADX line is, and some decent follow through again from that. Now, once the ADX line, that's this greenish line, dips below 20, we technically have lost our trend. And let's just see what happens here after that. And you can see the market seesawing back and forth, and the whole time the ADX indicator is here well below the 20 zone. And this is certainly more typical for a Friday. Look at that, just that constant back and forth choppiness. This is why we do our rabbit hole Fridays, because Friday sessions can just be nuts. All right, another interesting little thing about your DMI/ADX is that you can tell who is going to be more dominant by how the peaks correspond to each other. Now, hold on, let me find a good example. Okay, this one's fairly textbook. All right, so if you're watching the peaks, whoever makes the biggest peak and is on top is going to be the strongest. Pretty simple, right? Okay, here we have a market that has been in an uptrend. Here we have now a negative peak. And now we cross again. So things look bearish here for a moment. Now they cross again. And now we have a positive peak. Okay, that's kind of close to call. They're both pretty similar here. But because the blue is on top, I would be a little bit more inclined to be more bullish. All right, no buy signal yet. Here we come now with the sellers. Oh, there's a little peak. Okay, the little peak not surpassing the previous peak. All right, so that you see what I mean here? This current peak cannot exceed this last blue peak. Aha. Now, the blue line has just surpassed the high of this red line. You see how the red line made a peak pretty much right on the 20 line. But now the blue line has surpassed the red line. So that's telling me that according to the indicator, there is now more bullish pressure in the market than there is bearish pressure. Here now we have our buy signal. Now on the Falcon, this is your basic trend change signal. But looking at this chart alone up here on the Falcon, how can you tell that signal is going to have any follow through to it? it's a little bit tough to tell, isn't it? Now, you could take, excuse me, you could take the overall context into account, and that's always a good thing to do. You can say, okay, well, the trend has been up. This is a little bit of a consolidation period. I'm going to favor buy signals, and that is always prudent. But here, your DMI and ADX have just given you a little bit of a heads up that the buyers are stronger, so much so that they surpass the last selling peak. Now, your ADX is still very neutral. In actual fact, I would probably like to see the ADX at least start to rise a little bit, but maybe I would put my just in case order to buy right up there. Just in case the market starts to rally, and it rallies really quickly and takes out the high. I will have an order in place. Let's see what the next bar does. Aha, okay, fills our order. And now the ADX is starting to get a little bit of a positive lean to it. So I could just simply buy in at this point. I just hit the buy market button. Or I could just leave this order in play. Or I could bring my stop order down. Or I could look for a second push opportunity, maybe to tighten this order, this existing order. But you can see that right now, the market tipping its hand a little bit, that things are going to get a little bit more bullish. And you can see that resulted in a very nice move. So by monitoring the ADX and the market pressure overall, you can get a little bit of a insight into who is stronger in the marketplace. And what you're watching is you're watching these peaks relative to each other. Now, this kind of situation where I just showed you right here, this is ideal. This kind of situation here is a little bit more difficult to interpret, where we had a bearish peak, a bull peak that didn't exceed this one. But look at what happened. We had the pullback, but the sellers weren't able to cross. So we had that other indication, if you will. It's kind of the cross and hold. So it crosses, it pulls back. The buyers hold on to control. And here now is the buy signal. So even though at this point, the buying peak is below the selling peak, the fact that we have crossed and the buyers have held on to control tells you that the buyers are going to be stronger. Pretty cool, huh? So you have two very effective strategies there to use. You have your cross and hold, and then you have your peak comparison. So here we have a bearishness in the market. Here's a cross. Here's another cross. Here's another cross. And oops, look at this. The buyers are getting stronger. Okay, ADX is still very, very weak. So no real trend developing here. So because the ADX is very weak, I can put my just in case order to buy up there because right now the buyers are stronger. And then if the ADX begins to rise, see, look at that, no real trend. Oh, okay, now we're getting a little bit of an uptick. We still have our cross and hold. Just a slight uptick in the ADX, nothing to get too excited about. Okay, it's looking a little promising or more promising. So I'll probably leave my order here as is. Now, if the ADX were crossing above the 20, if it, instead of being way down here, if it was in fact up here, this has the potential now to become a really good trending move. So if I saw this kind of setup, I would probably, rather than take profit on target, I would probably be looking for a rather substantial move higher. Maybe to my next resistance line, maybe even going to zones. But given that the ADX line is very low, you can see it's just a little over 11 there, then I'm probably going to be a little bit more conservative with my entry. Okay, well, there's a nice uptick. I just got filled. Okay, a little bit of a hesitation. Nothing to be too alarmed about. We know those kinds of things happen. Okay, they tried to cross again, but they didn't. That's good for me. All right, the ADX is rising. The positive DMI is rising. Everything's still going the right direction so far. What I would be looking for is another attempted cross. If it crossed again, then I would be a little bit leery. So I'm in this trade. The ADX is still rising. My stops, I don't know if I'd have them at break even just yet, but I would probably have them somewhere around here. Well, I would be trying not to get them to break even. You guys have all seen me in the room. Okay, so now here we have the cross. This is kind of the danger zone now for the buyers because the attempted trend has fallen off. So I'm looking for some positive bullishness coming in. Okay, there's some bullishness. So at this point, I got to start rolling my stops. Oh, see, there's some negativeness coming back. Hasn't quite exceeded the buyers just yet. Oh, but now it has. So right now, at this point, it's not looking very good for my trade, is it? It's looking very much like I'm going to get tagged out. And there we go, get tagged out. But, you know, the part that didn't work out very well on this trade was that the ADX was so weak. I left my entry order a little bit far back, when in actual fact, if I had taken it on the cross and hold, I probably could have got to my profit target or at least to a break-even type situation. But even so, it's not a major loss. That's like a $50, $60 loss. Those are not the trades that are going to wipe you out. All right, let's take a look at what's going on with the current market. Aha, okay, so we've just had a cross, right? So we know the buyers are stronger. Here now is the pullback, and you can see it's kind of developing. So you can throw your order in there. We'll get that out of the way for now. And does it look like a trend is developing? Should we try to extend the profit objective? Okay, so there we are, we're long. Next profit, next resistance zone up here. Okay, so far so good. Got a little bit of resistance to deal with. Here was the cross and hold, or the little pullback hook. There may be another pullback and signal, because typically the pullback is a little bit more pronounced. There we go. So long as the blue line remains on top, so long as the buyers remain dominant, you can be a little bit more liberal with your stops. Oh, there we go. We're starting to pull back already. So if I get a couple of bullish bars in my favor, then I will definitely start to roll my stops a little bit more aggressively. I don't have it on here, but the DMI pairs nicely with the Bollinger Suite as well. If your Bollinger Suite is in sync and your DMI is in sync, you will usually tend to have good follow through on your signal. I wonder if I'll mess things up if I put it on here now. So here the Bollingers were bullish. The DMI was positive. Bollinger's very neutral right now. This lack of follow through is partly typical of a Friday as well. Back here, though, you can see was a decent signal. You had the cross. Or here, why don't we go with this one here? Because we had, let me make this bigger. Well, actually, the signal printed early. Sorry, I thought we had a signal print around here somewhere. But the Bollingers and the DMI surpassed the other peak, the little blue peak right here. Bollingers were already bearish. Okay, well, we're waffling a little bit now. Like I said, that's probably more due to Friday than anything else. And you can see, look at the momentum draining now. So I'm trying to be, trying to be good with my trade, trying to keep my stops at a reasonable distance. so I don't get stopped out prematurely. If we get the DMI cross now, and it becomes more bearish, if the red line stays on top, which would say that would be more dominant, then I would have to get more aggressive with my stops. Okay, we're trying to get a little bit of a trend developing at this point. Now I know Floyd, among others in the room, likes to watch the ADX line, that's just the squiggly green line, on a 30-second chart. And we'll be looking at another time at incorporating time-based charts along with your DTS charts. Try to give you a different perspective. But it's kind of like keeping your finger on the pulse of the market as well. If the ADX is rising on your 30-second chart, well, then there's a pretty good chance that you have at least a short-term trend developing. You can see right now we're getting a nice little trend developing. In fact, we've hit our well past our scalp target, double our scalp target, or our swing target. And just because I'm a bit of a chicken, I'm going to start rolling my stops very aggressively at this point. Just keep them one bar back. But even here, you could be watching your ADX indicator for an indication that the trend is weakening, namely that little hook right there. But I didn't want to wait for it. Pretty cool, huh? Not a bad way to take a look at the marketplace if you know what to look for. A lot of people look at your ADX DMI indicator and they just see a bunch of squiggly lines and they can't make heads nor tails out of it. Yeah, like Mark says, nice trade, interesting and eye-opening. I had no idea about this indicator previously. Great training demo and explanation on its use. And thanks, Ray. Ray says that was a perfect trade, Eric. Well, it does. It gives you, like I said, a little added insight into the underlying market condition. If we use this on a time-based chart, so here's our time-based chart. Come on now, work with me. So let's say we're going to go with your typical 5-minute chart. We'll throw the DMI on here. Now remember, for whatever reason on Ninja, they just label it DM. Let's bring that threshold down a little bit. This, I think, is where a lot of people, well, you can still have some confidence in it. You can still use the same type of criteria, even on your 5-minute chart. But it seems as though you're getting in late. And that's the problem that most people have with indicators is, okay, they're great, but I'm always getting in a little bit late. Here you can see, excuse me. Here you can see if you open up on May the 2nd, that was yesterday, yes it was, you would, looking at your 5-minute chart, you would say, okay, well, the sellers are dominant. I know that. The buyers are trying to become dominant. Okay, the sellers are dominant again. And at this point, I can look at shorting. Well, you weren't able to short before the big move lower. That's the good news. The bad news is that with the mean Renko bars, you probably could have started shorting back here because it just gives you that much more information sooner. Here, you would open up your 5-minute chart and you would say, okay, well, the market is more bullish today because the blue line is on top. You're always focusing on whichever line is on top. And if, even if you did this on a 5-minute chart instead of the mean Renko chart, so long as you were looking to buy, you would have done okay. Whether you decide to buy a green bar or buy the close of a red bar, you would have done all right. But just having that directional bias gives you a different look at the marketplace and kind of a little bit of a heads up. But I find it to be much more effective, like I said, using like your mean Renkos. Yeah, Mark says, what is the DMI in the indicators on NinjaTrader? Now, they used to do this better on Ninja. They used to actually label these things so that you could see what they are. Now, I suppose you have to go to the Ninja site and look them up. Okay, but let's compare them here. Okay, so we have the DM, then we have the DM index. Calculate on close. Oh, there's nothing to adjust here. I've never heard of the DM index, so I'm at a little bit of a loss there. I do see that it has the value of 3 here, which makes me think that maybe it's a 3-period ADX. I'm not sure. And then we have the DMI, which I don't know what to make of that. No, I'm sorry, Mark. I'm no help to you there. I'd have to go to the NinjaTrader website and try to find out the difference between the DM index, the DMI, and the DM. Goodness knows there's no shortage of indicators. I'm guessing the DMI is an interpretation, it's kind of a melding of the 3, trying to tell you when the market is flat and when it's trending, and if it's trending up or down. That's what I would guess. So a lot of times with these types of indicators, if you focus on the peaks and the valleys. So here, for instance, we had a little bit of a hiccup here. So we have a market that's rising, it's going flat, there's a little bit of a valley there. If the market continues below that valley, then that would suggest that prices will continue lower. Let's see, do we have anything here on the peak side? Not really. Well, I guess right here. Here's the market goes up, goes a little flat. Here's a little bit of a valley. Once it exceeds this last peak, you would anticipate prices to go a little bit higher, which they did, but not substantially so. All right, and this one, I don't know. It always makes me a little bit scared when I see things moving that quickly. I like to keep things fairly simple. You can do lots of things just with your basic DMI. One thing I will show you is that sometimes people like to speed up the ADX. Now remember, the ADX was an indication of your trend. What you can do, if you want to speed it up, is the ADX on the DM indicator. We need to make that transparent. Now we can add an ADX and let's say we're going to make that half the value. Let's say we're going to make it 7 instead of 14. So we've got the DMI calculating on a 14 period. We have the ADX calculating on a period of 7. And what's the point of that? Well, just to maybe make it a little bit more sensitive to trend. If 7 seems too much here, let's go with 10. We'll kind of split the difference. And what you can do now is you can impose it on the other chart. Here we go. Let's make that a little bit easier to see. All right, so now what we've done is we have the same indicator working. Your directional moving index, your blue and red lines, are working on a 14 period, but we've made the ADX, the trend indication, a little bit more sensitive. So it's now calculating on a 10 period. The idea is that maybe we can pick up a trend a little bit faster. I will point out one thing. Let's see if we can find, I know the market was kind of sideways here for a moment. When you get those periods where your ADX line is very, very low, aha, this is the one I'm looking for. When your ADX line gets really low, and it actually starts trading below your DM lines, sit up and take notice, because there's a trend coming. When your ADX line gets very low, and I mean low, not just, hovering around the 20 zone, but when it starts trading below your DM positive and negative lines, there is a trend in the making. So pay close attention, see who gets dominant and who stays dominant. You can see we switched dominance here a couple of times. First, the buyers were dominant, no signal though. Now the sellers were dominant. Okay, we got a signal here, but they were already crossing again. Now we got the cross and hold. Okay, and the buyers are becoming a little bit more dominant. We're starting to take out some of these highs. And look at that trend that follows through. So a third thing for you to keep a lookout for. That's probably enough for you to think about. If you get too many things to think about, you can't keep track of them all. But look for your cross and holds, look for your peaks, your peak comparison, and keep a lookout on your ADX line. See, here we're starting to get bullish again, right? The ADX is rising, the buyers are looking to get stronger. Where do I have a buy signal? I'm going to get a buy signal here in the hawk. I'm going to get a buy signal. Oh, I should get a buy signal here in the raptor. It's going to be a early cloud cross. There we go. There's the warning dot. Now let's do this from the hawk. Where's my buy signal? There it is. Get my exit order out of the way. So this now my first micro macro cross signal. And how are we doing? Okay, we're still dominant. We're still rising. We're going to get a falcon signal here as well. I should have left the Bollingers on, but I bet the Bollingers are probably in sync. Oh, okay, no signal just yet. All right, so we're filled on the hawk. You can see the falcon signal still developing here. Bring my stops up for my hawk trade. Let's see if we can squeak a little bit more momentum out of this Friday session. Okay, nice little hook there. That's encouraging. Have we lost all our momentum? Yeah, it is starting to fade a little. So give me 2 bull bars and I will start to get my stops in there very tight. Come on. You can do it. No, not yet. Oh, see, now we're getting the negative cross. Should be a little bit of pushback. We're at a significant resistance zone. I'm going to pull this out of the way just for demonstration purposes. Let's see if we get a cross, and then we'll see the buyers try to come back. All right, so now we've got a peak that we can compare, and we've got a cross, and we're going to see if we get a cross and hold. Right, so at this point, realistically, my stop should come up because see the buyers are weaker. They were unable to hold it. And there you go. Order canceled. So while that had a promising start here on the hawk, And maybe my DMI on the hawk would have looked a little different. Let's take a look. We got a few minutes here still. And I'm going to lower the threshold from 25 to 20. Let's see if it was as promising looking. Uh-oh, did I just break something? Oh, see, now the hawk was actually bullish much earlier. The hawk and the Bollingers were actually bullish right here, just as your first micro macro cross signal developed, right there. So turns out I was a little bit late with that. At this point, when I was looking to get long, oh no, we did have some momentum come back, just not enough follow through. Let's take a look at another example. Here's another cross, right? The peak comparison. The seller's obviously stronger at this point. So even though we had a macro pullback signal, it should be questionable. Now we're working a first micro macro cross, hasn't developed just yet, maybe in a bar or two. There we go. There's your first micro macro cross signal. And we've got the cross and hold here in your DMI. Your Bollingers are bearish. Taking a little bit of heat on that, but oh, there we go. Finally get a little bit of follow through. The hawk is like that, and it is Friday. You can see we're just, again, very, very sideways, really going back and forth here. But I think it could help you. I think it could help you a lot with, like I said, gauging who is stronger, who is controlling the market, and which way the market is likely to lean. It kind of gives you a little sneak peek behind the curtain. All right, gang, that's about all I have for you on DMI. If you have any questions, please let me know. Otherwise, I think we're going to close up shop here. Call it a week. It's a beautiful day. I know I can get a tea time this morning. So just wait a minute for you hunt and peck typists. No questions? All right. I must have done a good job. All right, everyone. Enjoy your weekend. I will talk to you on Monday. See you then. Bye for now.